Welcome back to MB Capital Strategies. Today we continue with the mining series, this time focusing on Kazatomprom. Kazatomprom is not your typical mining stock. It's the world's largest uranium producer with an attributable market share of 21 to 22%. But through Kazakhstan, it accounts for about 40% of global production. It's virtually a monopoly in a critical raw material for the nuclear renaissance. Extremely high cash flow and an attractive dividend. And yet it's brutally volatile, geopolitically sensitive, close to Russia and China, and often valued at a discount by the market. The question is Kazatomprom a unique cash flow lever in the uranium supercycle or a geopolitically risky value trap? And that's exactly what we're going to clarify now. Figures, cash flow, and the cycle. Let's first take a look at my entry point here. In total, I hold 11 shares. I entered at €30.24 with a total investment of €332.60. Currently, that corresponds to a price gain of 60% and a dividend, which I have already received, of €22.98. Now let's move on to the company overview. Kazatomprom is the largest uranium producer in the world, and by a wide margin. It holds an attributable market share of 21 to 22%. It has physical control over Kazakhstan, which accounts for about 40% of global uranium production. Important for context, attributable refers to the market share that Kazatomprom is economically entitled to directly after accounting for joint ventures and their respective stakes. However, Kazakhstan physically produces around 40% of the world's uranium. And this production is carried out almost entirely through Kazatomprom as a state-controlled corporation. For comparison, Cameco has about 17%, Orano and others are significantly smaller, and the rest of the market is highly fragmented. And that constitutes structural market power. This makes Kazatomprom a price maker, not a price taker. It is systemically important for the global nuclear industry and critical for energy supply and decarbonization. Almost every nuclear power plant in the world is directly or indirectly dependent on this company. Why are these 40% so crucial? The market often misunderstands the numbers. 40% through Kazakhstan means that supply control is possible. Production cuts have an immediate impact on the world market, and we have enormous leverage in times of scarcity. Kazatomprom does not behave like a classic miner, but rather like a commodity gatekeeper. That's why there is disciplined production, a focus on margins instead of volume, and we have long-term supply contracts. This is the reason why Kazatomprom remains extremely profitable even when the uranium spot price moves sideways. The 52-week high and low are between 27 and 53 euros, currently at 49.13 euros. Analysts have set a target here of 52.32 euros, and investing has set a target of 62.72 euros. Uranium market and monopoly logic. Uranium is not a free market like oil or copper. The special characteristics are long-term supply contracts dominate, extremely high entry barriers, political and safety-related approvals, and right in the middle is Kazatomprom with de facto control over 40% of production in Kazakhstan. So if Kazatomprom produces 5 to 10% less, there is a noticeable global shortage of supply. The current uranium spot price is $78. And this is driven by the nuclear renaissance, new builds in China and India, and we have SMRs, that is, small modular reactors. And we have rising electricity demand, including from AI data centers. How are revenue and earnings power looking? Now, let's look at the numbers. Here is the following revenue development. In 2021, about 1.4 billion euros. In 2022, 2 billion. In 2023, 2.9 billion. And in 2024, 3.3 billion euros. That means revenue growth of over 130% in 3 years. And crucially, not due to an explosion in volume, but because of higher prices and better contract terms. And that's a classic advantage of a company with market power. Now the margins, and here you can see the power. We have a gross margin consistently between 54 and 57%. For comparison, copper and gold miners are often at 30 to 40%, and many uranium peers, that is competitors, are significantly below that. And that's elite level. It shows that Kazatomprom dictates prices instead of accepting them. The operating cash flow in 2024 was 59 million euros. Capex was 320 million and free cash flow in 2024 was over 630 million euros. The free cash flow margin is between 15 and 18%. Extremely strong for a miner. And importantly, this cash flow doesn't come from aggressive expansion, but from discipline and market power. Now for the balance sheet check. The cash position is high, the debt is low, we have no refinancing stress. We can ride out the volatility, pay dividends even during weaker phases, and 90% of all mining stocks can't do that. Dividend and cash flow first. Currently, we have a dividend yield of about 3 to 4%. We have a payout of about 47.87% of free cash flow. We have historically high payouts during boom phases. Special dividends are possible and adjustments can be made during downturns. This is exactly how a cyclical commodity stock should be managed. Over the past 5 years, we have seen dividend growth of 27.14%. And here as well, looking at the historical data up to 2019, we can see the fluctuating payouts. In the last few years, we were roughly between €1.50 and €2. We have a market capitalization of $16 billion, and the valuation is more favorable than many competitors because we have a discount due to geopolitical risk, and the market power is underestimated. Now let's compare Kazatomprom with Cameco. Cameco is Western, politically clean, has a 17% market share and a higher valuation. Kazatomprom, on the other hand, geopolitical risk, 40% through Kazakhstan, low costs, higher margins, and a more favorable valuation. The market pays a safety premium, but ignores the quasi-monopoly. Now to the risks, and there's no sugarcoating it. We have geopolitical risks, Kazakhstan's stability, proximity to Russia and China, and possible tax changes. We have acid shortages and production delays. We have the uranium spot price is volatile. Transport routes and diversification away from Russia are underway. Important, one must not forget that as a state-owned company, Kazatomprom always has political objectives in mind, not just shareholder value. Production in 2025, around 25 to 26,000 tons of uranium on a 100% basis. 2026, a further reduction of up to around 10% is planned. What does that mean? 100% basis means total production from all mines, regardless of joint venture shares. So Kazatomprom will produce a total of 25 to 26,500 tons of uranium in 2025. Even if, economically, only 21 to 22% of that directly belongs to them, attributable share. 2026, further cuts of 10% are planned. Why is this important? Kazatomprom is deliberately planning to produce less uranium. Not because of problems, but strategically. In a market where Kazatomprom controls 40% of global production through Kazakhstan, this means there is suddenly a noticeable shortage of supply worldwide. And that supports prices, stabilizes cash flow, and protects margins. Why this is therefore not a bad sign. Production is worse. But with uranium, it's often exactly the opposite. Less supply with rising demand means higher prices. In the end, everything comes down to supply and demand. Kazatomprom is deliberately forgoing volume in order to earn more per ton. That is power, not weakness. So to make it very clear once again, 25 to 26,000 tons of uranium means that's the total physical production. In 2026, Kazatomprom is deliberately planning around 10% less, not out of weakness, but to control supply and stabilize prices. I think that explains the situation quite well. So it's not a buy and forget, it's clearly a geopolitical cycle play. So what is the conclusion? Kazatomprom is the world market leader with a 40% market share through Kazakhstan, a cash flow machine with elite margins, an attractive dividend of around 4%, a beneficiary of the nuclear renaissance, geopolitically risky, cyclical and volatile, with production and political risks. My conclusion, not a buy and forget, but a unique cash flow lever in a structurally tight market. That's why I hold Kazatomprom at a small to medium weight, actively monitor it and focus on spot prices, production updates and geopolitics. If things stabilize or the boom continues, you can selectively increase your position. Now it's your turn. Kazatomprom, cash flow monster or too risky? Is the quasi-monopoly being valued correctly? Write it in the comments and let me know. Feel free to like the video if you enjoyed it and subscribe to this channel if you want to see more content like this. Here, it's all about hard assets and portfolio updates with a focus on high yield stocks. As always, this video is not investment advice, but simply my personal strategy. I'm looking forward to having you join me in the next video. Until then, happy investing.